I am Dr. Subodh Kesharwani, working with Indira Gandhi National Open University in the School of Management Studies. The topic which I am going to talk, that is e-banking. So we know that in the past we have two preceding sessions which was talking on e-commerce, then we have electronic payment system. Today we are going to talk on the topic called e-banking. We know that how the banks had been changed, and when we talk about the payment system, this banking is going to play a very vital role. And when the third party transaction involves that moving from e-commerce to wallets, then banking role is quite important into it. So today's discussion talks about how the e-banking is going to play a vital role, what are the importance of e-banking, and what are the certain types of e-banking which is changing. And with the change of time, we have observed that technology is going to play a very vital role, like the artificial intelligence, the blockchain technology, or the other technology which are there. So this is somewhat giving paradigm shift to what e-banking is. So banks start adopting more and more technological advancements, and that resulted in enhancement of its efficiency. So electronic banking has many names like e-banking, virtual banking, digital banking, internet banking, or the technology enabled banking. When we talk about technology enabled banking, we see that how the artificial intelligence, how the blockchain technology, how the machine learning is somewhat bringing the paradigm shift. And we have moved from this plastic money to wallets, and then the other trend is coming up, that is virtual currency. So this Bitcoin and other things are coming up, which is going to give new shape to this e-commerce business as well as e-banking. So this whole e-banking lecture is going to talk on certain things, and gradually we are going to talk about certain things on a one-to-one basis. So banks are investing heavily in digital banking. We have seen that there was a time when net banking was not everybody's cup of tea, but right now what happened, it's a basic thing which the bank need to possess. If the bank is not equipped with the technology, nobody is going to open their accounts in the banks. So from this we observe that how e-banking is quite important and quite contemporary in nature. So through e-banking, a customer can access his accounts and conduct many transactions using his computer or mobile phone, because the computer name or nomenclature of computer is changing with the change of time. There was a time when we talk about the computer was confined to hardware and software, but right now it had replaced by the gadgets, by smartphones. So this is one of the way by which we can say that e-banking is somewhat differentiate with the change of time. So in this whole presentation, we are going to talk about, or rather we can say we are going to give the holistic view about e-banking services. So prior to going into the depth of this topic, we just want to throw on light that why there is a need of e-banking. Because in the age of instant payment, the idea of waiting for a purchase to clear will one day seems as antiquated as an abacus. So increasingly consumer expect their accounts to immediately reflect when they have bought something. So what is there right now, it's moving in a real-time basis. So at the same time, there are cyber criminals, there are cyber threats, there are cyber security, which is going to be quite important, because the plastic cards, the debit card or credit cards or the wallet information is going to be shared by the third party. So there, the gateway is going to play a very important role. We have seen in electronic payment system that gateway is quite important, because the gateway is equipped with the firewall and other things, and it is blocking the unwanted the things which the hackers used to extract from the particular portal. So this is more effective, and somewhere what we observe that e-banking is not a technology which can do many things, but it can recapitulate how to detect and control fraud. Because what we observed that the role of the e-banking was in the beginning stage was just to merely do the transactions. But what had happened in the present scenario, that it is talking one step ahead to that, and it is somewhat controlling the fraud also, because the financial transactions are governed through paperless mode, and there this controlling the fraud is quite important, which could be help with certain tools which had been designed for the banking industry. So there is a great involvement of public money, and extra precaution need to be required, because massive transaction is going on, and it's going in a frequent manner. So this is where the things are there, and if you see this particular slide, you will come to know that what are the utilities of e-banking. If you see at the top of the ladder, we have got e-commerce, then we have e-finance and e-money, and when the e-finance and e-money will be done, then e-banking comes into picture. So what we have observed that in our previous lecture we have talked about e-commerce, that how the e-commerce is flourishing on a day-to-day basis, and in this lecture we will see that how e-banking played a pivotal role in streamlining the payment, because streamlining the payment is something which is quite important. So we had talked about gateways in our previous lecture and know how to use the e-commerce portal, and what is the role of banker as third party, because when the gateway is developed, the money used to redirect to the third party. And in India, we have already talked about in our previous lectures that in India we are using a two-layer of security. So one is where where the details of the CVV used to put, which is given at the back of the credit card or the plastic money, and other is the OTP. So one-time password is there. So it is somewhat secure when you compare with the other promoters who are doing that. But again, the cyber fraud, cyber threat is going to be there. So this need to be taken care. So if you go more into the depth of this evolution of e-banking, we see that the evolution process of latest service delivery mechanism was started through internet, and that e-banking started in the early of 1980. So in 1980, the term online got popularized, and it was referred to a banking medium of using a terminal, keyboard and monitor. Right now this has been replaced with the help of smart card. Another term used for this was home banking. So home banking is like the manner we used to talk in the present scenario, that work from home culture, where you're not going to office, whereas you are working in your home and doing the office activity or the organization activity from there. So this home banking is somewhere where you don't have to visit to the particular branch or for the transaction purpose. As far as the physical cash is concerned, sometimes there are paperless branches are coming up where you put details about that you are going to withdraw certain amounts. Either somebody is going to drop the money at your doorstep, or they have a different model. So this is purely paperless, where for transaction purpose you don't have to visit to the particular branch, like as far as the withdrawal is concerned, as far as the deposit is concerned. So there are certain paradigm shift which had been changed. So the most recent technological advancement is the evolution of e-banking, and banks got the sense that internet facility will open up new horizons for banks and will help them to adapt globalization effectively. In essence, e-banking is an electronic consumer interface as an electronic channel of distribution for banking services and products. So e-banking is a process which banking consumers manage their banking transaction without even visiting the bank branch. So there is no need to visit to the bank branch. You have got a particular ID or the passwords. Through that you can enter into the gateway of the bank, and then particular account, and you can see the particular balance sheets or the complete details about your transaction, like what are the withdrawals and what are the deposits had been done in this particular branch. So e-banking is now changing the face of the business, because when you talk about the e-commerce, because there was a time when commerce was purely on brick and mortar mode, and then the stereotype commerce was replaced by this electronic commerce. Then mobile app is there, now smartphone is quite there. So a number of authors or experts have defined e-banking services as a modern day facility that provides conventional bank products and services through a new technological medium. So banking sector has always been on the top by using the ICT in banking business, and there are certain challenges which are there, like when you talk about the banking sector, like increase in competition, because in the beginning stage what happened, that the foreign banks who have entered in the Indian jurisdictions, they were the one who were equipped with this contemporary thought, but at the afterwards the private bank have introduced certain the internet banking philosophy, and then right now what happened, all the banks, either it could be the private, public, all are equipped with the with this contemporary thought, and they are equipped with the internet banking philosophy. So the variety of demand of heterogeneous customers, decreasing revenue margin, and advantages provided by the technology is there. So this have compelled bank to process new human resource management system. So what had happened when the technology enters, somewhere it can work as a robots, and there is a feel of the job security is there. So the humans who are working in the banks, like the people who are working in the bank, supporting staff, they have a feel in their mind that if the technology enters, they will be out from the picture. So somewhere they have this, over there, this skilling is going to play a very vital role. If they are skilled, if they are equipped with the latest trends, latest technology, this is definitely going to bring a change. So safety measures such as cryptography and biometrics is coming up, where the cryptocurrency is also there. So virtual currency is something which is going to bring this e-banking business in a more systematic manner, or more contemporary manner in the coming years. If you talk about the types of e-banking, the banks offer types of services through electronic banking. There is a level 1, level 2 and level 3. If you see the level 1, this is the basic level of services that banks offer through their websites. Through the service, the bank offered information about its products and services to customers. Further, some banks may receive and reply queries through email. So this was something which is a beginning stage, where things are more static in nature, and one-way communication is there, where the information is on the portal of the banks and you can just log in and get the information. There is no dynamic interaction between the one. Then the level 2 talks about that how the banks allow their consumers to submit instructions or applications for different services, check their account balance. However, banks do not permit their consumers to do fund-based transactions. This is the second layer, where again it is somewhat static and little have a flavor of the dynamic things. Then the level 3 is purely where the banks allow their consumers to operate their accounts from fund transfer, bill payments and purchase of redeemed securities. So this is the trend which is going on, where we have seen that the introduction of electronic payment system or electronic fund transfer there. There are certain ways by which the fund is going to be transferred. It could be RTGS, it could be IMPS, it could be NEFT, which is the omnipresent ways. So we will definitely throw a light on all these things in a more important manner. So what the banking, this e-banking or the internet banking, or we talk about the online banking, had done, it had basically changed the mindset of the banking industry. Either it could be the employee, or it could be the consumers, or it could be the service providers, or the banking industry. And this had talked massively about the paperless approach, and intention behind was that to reduce the malpractice, or to control the threats, or and provide the security to the consumers, because the financials are involved and the data is quite sensitive. So how the data is going to be regulated, for that the big data analytics, or the blockchain technology, and somewhere the robotics and other machine learning approaches are quite important into it. So when you talk about the change in mindset, the first thing is lesser transaction cost. So electronic transactions are cheapest modes of transaction, and because you don't have to go particularly to the branch, and the traveling time is reduced, and many things you can do. So, and the lead time is quite less, because when you done the transaction, same day the transaction can be governed. Whereas when this paper mode transaction was there, it takes usually 3 to 4 days, or somewhere if the discrepancy is there, the issue is there, it can again linger on to 1 week more. So by which the time can be reduced, a reduced margin for human error. There is less chances of human error, because things are more reconciled and more linked. So information is relayed electronically, there is no room for human error, and less paperwork is there, because the things are moving from there. So there is no question of keeping the records in a paper format. The only thing is that how the data is going to be analyzed, and how the gigantic data which one have is going to be captured and analyzed in that manner. So more loyal customers are there, because it's very prompt, and it's where the jurisdiction is quite high, like the international transactions. This e-banking is quite vital, because it's very easily transfer the money from one destination to other destinations. So there are 3 functional kinds of e-banking that are currently employed. One is the informational websites, then you have got communication websites, and then you have got advanced transactional website. So when you talk about informational website, such services are known as first level of e-banking, because through such services, bank provides marketing information regarding banking products and services as a standalone server. It has very low degree of risk. There is no connection between server and bank. This is somewhere the things are not linked, because this is informational website. So communicative website, if you talk about in this system, there is very less scope of communication between banking system and e-banking users, and this communication is only to the extent of email, account balance inquiry, loan application or static file updates. This system is not having fund transfer facility again, but right now what the trend is going on, that the one-stop portal is coming up where all the informations regarding your debit card, your credit card, your accounts, or your multiple accounts, your insurance, if it is linked with particular branch or bank, you get all the information at one portal. So this is something which is providing roof to the consumers that they can able to access all the information at one shot. So this kind of model is coming up where advanced transactional website is there. The form of e-banking enables e-banking users to transfer their fund electronically, make payment of utility bills and conduct other banking transactions online. So different kind of model is coming up. What we have observed that when e-commerce had been started, it was not merely with the purpose that it is going to do the transaction of the products only. The transaction of the services has also come up, and what we have seen that they have come up with their own wallets. If you take example of Amazon had come up with their own wallet called Amazon Pay. So in that wallet you are going to not only do shopping which is confined to the Amazon products, but you can pay your utility bills also. And on the other hand, you can watch the web series through Prime Video. So the multiple kind of model is coming up where this e-commerce or even the banking industry is not confined to that. So when you talk about the e-banking, it is right now more holistic in nature and talks more about that how the things are going to be interlinked, and varieties of the combinations. The different combination can accumulate, and bundles of privileges, bundles of the products the bankers have is going to be given to their consumers. So this is the trend which is going on. And when you talk about importance of e-banking has made life much easier and banking much faster for both customers and bank. It's not like that the one domain is going to be benefited or one vertical is going to be benefited. There are certain more verticals which are there. Either it could be employee or it could be consumers or banks. So when we bifurcate this banking industry, it revolves around the three layers, that is bank as one end, then business, and then consumers. So what we observe that, and all these three are linked with one another. So if the banking is good, if the integration is good, end of the day consumers can able to access multiple information at one portal, whereas the employee is also not in a very hectic stage, because since the systems is streamlined, so very easily they can access all the information. So this had given many things to the banking industry and provide a thing where customer usage is very high and numbers are very high. And what we observed that this when we talk about the international banking, so this had given, because you don't have to open an international branches, or you don't have to have branches at multiple locations. There was a time when we observed that many branches are there at small jurisdictions, but right now the model had been changed where we have observed that things are less branches are there, but more technologically equipped with that, so that customers can and this particular branch philosophy is also going to be eradicated. There was a time when consumers can confine to or do the transaction from the particular branch, but multi branches approach had come up where you don't have to rigid to or confined to the particular branch. You can drop your check any of the branch of the particular bank, and multiple banking is there. In ATM also we observed that there was a time when you can withdraw the money of the particular ATM of the particular bank, but this multiple ATM facility had come up where you can withdraw your money from any of the branches, any of the ATMs. So there is no need to confine to the particular things. So what we have observed that customers are more convenience had been given to consumers, and it is more into 24/7 mode and lower cost per transaction. So because there was a time when the customer does not have to visit the branch for every transactions, and it saves time. So no geographical barriers. In traditional banking system, what we observed that there was a geographical distance. If you want to go to the particular branch, or the bank, you have to devote full day over there. So this model had come up for small things, for small transactions, or for updations of your passbook or the bank account details. You don't have to visit to the particular branch. So physical movement had been stopped, and wherever necessary the things are there, like the banks provide some other facilities like locker facilities. For that you have to visit. Otherwise, for majority of things, you can do the transactions from or through internet. So what we have observed, that when you talk about the popular services which are under e-banking in India, the first one is the automatic teller machines, which is usually called the ATMs. Now what happened, new kind of model had come up where we have a currency, then we have a plastic money, either it could be debit card or credit card. Then what we observed, that this ATM had come up where you put the plastic money in the machines and you get and withdraw the money. Now other kind of model had come up which is called the wallets. So there is no need of money. You can just fetch the particular bank accounts and transfer the money to your wallets, and from that wallets you can do some online transactions and or the e-commerce, and you don't have to physically go to the stores, because they accept the wallets. Either it could be Paytm or Amazon Pay, or if you are traveling you can use the Ola Money, or different kinds of wallets are there, and it's it's basically company specific. So these wallets are having some more benefits, and they give some more cash back. So end of the day, what happened, it's become quite lucrative to do the shopping through wallets. So again, the physical movement to particular branch had, or to the bank or to the ATM, had been stopped. So then telephone banking is there, where if you want a cash, there are some branches which are now a paperless kind of, and you don't have to visit to the particular branch. If you want a money, you just put the information and somebody can come at your doorstep and give you certain amounts. So this is one of the model which is coming up, and electronic clearing cards are there, then smart cards are there. It could be a plastic money, debit card or credit card. Then electronic fund transfer is there, where there are certain ways by which the funds can be transferred from one account to another account, and you don't have to do the paper transactions into it, like no filling of information. Just you have to add the beneficiary in the beginning stage, and you have to make the capping. You have to put the ceiling. So with that capping and ceiling, you can somewhat regulate yourself also, that no surplus transaction can go on. So if I want to transact to the particular person, I can make a capping that it could be 10,000 per day. So with that amount only, the things can go on. So the doorstep banking, which I have talked about, then NEFT is there, then RTGS is there, then IMPS is there. So there are certain wallets which I have talked about, like Google Pay is there, and there are certain recharge wallets which are helping in mobile recharge or paying the utility bills. So not only the transactions which are tangible in nature, there are some intangible transactions which are also coming up. So by that you can able to do that. And the most important, the most prevailing the transaction which we are using right now is NEFT, RTGS and IMPS. If you go more into the backdrop of these three, because these are quite frequent in nature and used by the banking industry, by the consumers, or by the business world. Either it could be the transaction, the B2B way, that is business to business or business to consumer, or your G2B, like governance to business. Aadhaar card is there, like direct bank transfer is there. So all those things are linked with that. So this kind of phenomena is coming, where what we observe, that the transactions you can use it. Like when we talk about the RTGS, which is an acronym, the full form is real time gross settlement. And when you talk about NEFT is National Electronic Fund Transfer, and then IMPS is Immediate Payment Services. So what we observe, that if you talk about these three transactions, they have certain constraints. Like RTGS starts when the transaction is more than 2 lakh rupees, or NEFT somewhat takes some more time if you compare with RTGS, whereas Immediate Payment Service is there, which is called IMPS. Maybe if you talk about certain service charges, maybe it had some discrepancy into it, but the difference is quite minute in nature. It could be 0.1%, or maybe a very minute difference is there. So the RTGS system is basically meant for large value transactions, and NEFT has fixed batch slots and can take around 2 hours for the recipient to receive the funds, and IMPS is an instant fund. So the minimum amount what I have talked about is there, and And what we have observed that RTGS and IMPS is more on a real-time basis. Real-time is like, the consumers are able to know what exactly the scenario of the transaction is this. So there is no lead time, and very instantly the thing had been done and the accounts had been updated in a very frequent manner. So this kind of model had come up which had given, a roof to that, and new kind of thing had been come up because the technology is changing, the consumer's mindset is changing, and approach is changing. Now we are more moving towards, from push approach to pull approach, and pull approach always believes in customer centric. So the consumers, as far as the banking industry is concerned, they want, a customized approach. So artificial intelligence, blockchain, robotics, big data analytics, machine learning and deep learning are quite important, because what AI is doing, AI is working quite a lot in this direction, and the biggest example is that it has basically transformed the whole banking process, and AI technologies are making banking process faster, money transfer safer, and back-end operations are coming up. And AI is also being implemented by banks with middle office functions to detect and prevent payments, fraud, and improve process for anti-money laundering, because this, and know your customers, because KYC is quite important ingredient into it, and there are certain chatbots enabled which can work as a voice assistant and other things. On the other hand, we have observed that the blockchain technology is coming up. When you talk more about the blockchain, it is something which has coined the bitcoins, and Satoshi Nakamoto, who was the originator of this blockchain phenomena, now this blockchain technology is coming up because it is more regulating the virtual currency and helping a lot in the banking industry, because when the consumers had done the transactions, how the transaction is going to be regulated, and what kind of transaction, whether it was genuine or not, all those things are going to be done through that. And upgraded ATMs are coming up. There was a time when ATM was transformed, and now this if you see some good examples, like some ATM innovations are already available in overseas. For example, like biometric authentication is already used in India, and this is used by some other countries also. These technologies can help overall bank security by protecting against ATM hacks, because what we observed that certain things had been changed, and on the other hand, the robots are coming up. What we observed that one of the robots is called Pepper. Pepper is primarily handles hosting duties. If you talk about the banks, the certain foreign banks, they are like teaching customers how to open accounts, cracking jokes, relying credit cards, and on the other hand, there are some recent examples where we observe that customer open accounts remotely with a selfie. So this kind of model had come up where physically you have to visit to the branch, you can open the account at your doorstep. So this is again quite contemporary in nature. So AI powered biometrics with software pattern is there, and in real time application manner. So there are certain sources which are there, and system runs predictive data sciences, informations, and fraud detection through technology. Now the biggest challenge what we observe that how to control the fraud, because massively the transactions are going on, and how you are going to whether the transaction was genuine or not. So how to find out about the beneficiaries, whether the beneficiary was genuine, and how to control this there in that cyber security is going to play a very vital role. So machine learning uses big data and so-called clustering algorithms in real time to counteract applications and transaction fraud. And on the other hand, we have seen that data science company like Fitzai, which uses machine learning to help the bank manages risk by monitoring transactions and raising red flags when necessary. So what we observe that this banking industry is changing with the change of time, and there was a time when banking was just merely to open accounts and find the knowing more about the financial transactions. But right now the model had been changed. The more technology had come up, and consumers are expecting more, and wherever you find out the multiple transactions or one transaction, or from one particular account thousands of transactions are done. So how you are going to regulate the fraud or the other things, because everything is going to become a paperless, and in the coming years more e-commerce will become up, and in that what we observe that the electronic payment system and e-banking role is quite pivotal. So this is not going to definitely enhance the e-commerce business, but somewhere safeguard the consumer's interest, which is more important, because if the hard-earned money of the consumers or the the consumers who have a bank account sabotaged, ultimately there will be movement from consumers to a different bank, and that is the reason the banks are coming up with contemporary thought, making some new innovative things which can attract customers and come up. I think we have talked a lot about all those things, and these 3 lectures, which was part of particular block, starting with e-commerce, then you have electronic payment system, and then e-banking, is quite interlinked, and it is something which is part and parcel of the whole business and the consumers. Thank you very much.